In early March 2026, Canada's Prime Minister Mark Carney stood before the Australian Parliament in Canberra and became the first Canadian leader to address that chamber since 2007. It was the first bilateral visit by a Canadian Prime Minister to Australia in nearly 2 decades, and what came out of it wasn't just a photo opportunity. Carney and Australian Prime Minister Anthony Albanese signed a genuine cluster of new agreements spanning critical minerals, defense, artificial intelligence, and investment, all built around a central idea Carney put directly to Australian lawmakers. In a world of great power rivalry, middle powers have a choice: compete for favor or combine for strength. That framing is the key to understanding everything that followed. Let's start with what critical minerals actually are and why two mid-sized, resource-rich democracies deciding to work more closely together on them is genuinely significant, rather than just diplomatic theater. Critical minerals are the raw materials, lithium, cobalt, graphite, rare earth elements, and dozens of others that go into batteries, magnets, semiconductors, wind turbines, fighter jets, and the data centers running the world's AI systems. They're not rare in the sense of being scarce in the ground. They're rare in the sense that turning raw ore into a usable, refined material requires enormous industrial capacity, and one country has built the overwhelming majority of that capacity: China. Depending on the specific mineral, China currently controls somewhere between 60 and 90% of global processing and refining capacity. For rare earths specifically, the International Energy Agency puts China's share of separation and refining at around 91%. China also manufactures roughly 94% of the world's rare earth-containing permanent magnets, the kind used in everything from electric vehicle motors to precision-guided weapons. For a smaller but still critical group of elements known as heavy rare earths, nearly all global processing capability sits inside China's borders, giving Beijing what amounts to a virtual monopoly over a handful of materials that Western defense and clean energy industries can't currently do without. That concentration isn't accidental. And it isn't just a matter of geology. China built this dominance deliberately, over decades, through sustained state investment and a willingness to accept the environmental costs of large-scale mineral refining that other countries have generally avoided. And Beijing has shown repeatedly that it's willing to use that dominance as leverage. Export controls on rare earths, announced in 2025, triggered sharp price spikes and left the majority of European manufacturers that depend on Chinese supply chains facing serious licensing delays and cost increases. Analysts have described this as less about outright scarcity and more about control, temporary, reversible restrictions that let China extract concessions and discourage large-scale Western investment in alternative supply chains, all while preserving its own pricing power. It's against that backdrop, a world where one country holds a genuine choke point over the materials modern economies and modern militaries both depend on, that the Canada-Australia partnership needs to be understood. Canada and Australia aren't small players in this picture. Both countries are what geologists and trade officials call large-scale like-minded producer nations, home to some of the world's most significant critical mineral and rare earth reserves. That phrase, like-minded, is doing real work here. It's diplomatic shorthand for democracies with transparent legal systems, environmental standards, and a shared interest in not being dependent on a strategic rival for materials their own defense and technology sectors need to function. The idea of formalizing cooperation between the two isn't brand new. Canada and Australia issued a joint statement on critical minerals cooperation as far back as March 2024, and followed that with a more detailed joint declaration of intent between Canada's Department of Natural Resources and Australia's Department of Industry, Science and Resources in October 2025, laying out shared priorities and naming the country's respective energy and resources ministers to lead the coordinated work. What happened in March 2026 was the moment that groundwork turned into something with real teeth. During the Canberra visit, Canada formally welcomed Australia into something called the Critical Minerals Production Alliance, an initiative Canada had launched the previous year during its own presidency of the G7. The alliance's explicit purpose is to expand critical minerals production and processing capacity and to diversify supply chains across the entire journey from mine to market, not just extraction, but the refining and manufacturing stages where China's dominance is actually most concentrated. Bringing Australia in matters because Australia isn't a mine or mining country. It's one of the world's largest lithium producers and holds substantial reserves of rare earths and other battery materials, giving the alliance a second heavyweight producer nation working in coordination with Canada rather than in isolation. Alongside the Minerals Alliance membership, Carney and Albanese launched a new clean energy partnership between the two countries designed to open up new trade and investment opportunities, help scale up clean energy technologies, and modernize electricity grids on both sides of the Pacific. Canada's own government framing was direct about the stakes. Both countries hold vast reserves of materials that are key to defense, manufacturing, and the technologies of the future, including batteries, vehicles, and the AI systems currently being built out at enormous scale. Deeper collaboration, the government argued, would boost bilateral investment, create high-paying mining careers, and strengthen security and defense ties at the same time. That last point, the defense dimension, is genuinely inseparable from the mineral story, and it's worth spending time on because it shows how critical minerals cooperation is increasingly treated as a security issue rather than a purely commercial one. Australia is already Canada's largest defense partner in the Indo-Pacific region, and the Canberra visit expanded that relationship considerably. Canadian Armed Forces personnel are set to begin training in Australia in mid-2026 on something called the Arctic Over-the-Horizon Radar System, a key piece of Canada's broader modernization of NORAD, the North American Aerospace Defense Command, providing longer-range surveillance and faster detection of airborne threats across the Arctic. The two countries also agreed to explore concrete mechanisms for moving defense equipment and personnel between them more easily, and open discussions on a formal status of forces agreement, the kind of legal framework that governs how each country's military personnel operate on the other's soil. Beyond that, Carney and Albanese agreed to pursue deeper industrial collaboration between their defense sectors, specifically looking at options like reduced export controls between the two countries, reciprocal sharing of intellectual property, and even co-production of military hardware. If any of that sounds familiar, it's because it mirrors exactly the kind of integration the US and its closest allies have historically maintained with each other. And its extension to Canada and Australia signals both countries hedging against over-reliance on any single security relationship, including, implicitly, their traditional reliance on Washington. The artificial intelligence piece of the visit rounds out the picture of what this partnership is actually trying to build. Carney and Albanese welcomed a new memorandum of understanding on AI safety, enabling closer collaboration between the two countries' AI safety institutes and allowing them to share technical expertise directly. In parallel, Canada, Australia, and India agreed to advance a separate memorandum under something called the Australia-Canada-India Technology and Innovation Partnership, aimed at formalizing collaboration on AI development and deployment, connecting the three countries' industries and creating openings for private sector partnerships, including for small and medium-sized businesses and startups, not just the largest players in each market. Then there's the investment side, which is arguably where the dollar figures get the most eye-catching. While in Sydney, Carney welcomed a new memorandum of understanding designed to deepen investment cooperation between Canadian pension funds and Australian superannuation funds, the enormous pools of retirement savings both countries have built into some of the largest institutional investors in the world. The goal is explicitly to remove barriers to cross-border investment and support, what Carney has described as a broader mission to mobilize $1 trillion in total investment inside Canada over the next 5 years. During the visit, Carney met with business leaders and pension fund executives who collectively manage close to $7 trillion in capital, looking to identify sectors with the strongest investment potential. One concrete result came out of that engagement immediately. The Australian pension fund manager, IFM, announced its intention to invest up to $10 billion in Canada. Carney and Albanese also agreed to launch negotiations to modernize the existing Canada-Australia tax treaty, a technical but important step that will make two-way investment between the countries administratively easier going forward. It's worth putting some numbers around the existing relationship because the scale of what's already there helps explain why both governments think this expanded partnership is worth pursuing seriously rather than as a symbolic gesture. In 2025, bilateral goods trade between Canada and Australia totaled $7.8 billion, with bilateral services trade adding another $4.6 billion. In 2024, Australia was the largest destination in the entire Indo-Pacific region for Canadian direct investment, which totaled $58.8 billion, while Australian direct investment flowing into Canada reached $27 billion. Both countries are also members of the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, a free trade bloc that represents 595 million consumers and roughly 11% of global GDP, giving the bilateral relationship an existing multilateral trade framework to build on rather than starting from scratch. Carney's own language in Canberra tied all of this together in a way that's worth quoting closely because it captures the strategic logic driving the whole trip. He described Canada and Australia as more than friends, saying the two countries are family with shared histories, values, and cultures, and argued that as Canada forges new partnerships and coalitions abroad, Australia is a natural partner in that mission. By working closely together across energy, critical minerals, investment, defense, and AI, he said the two countries would create more opportunities for their people. It's worth noting this Australia trip didn't happen in isolation. It came directly on the heels of a similar diplomatic push in India, where Carney had just announced a broad set of initiatives renewing and expanding the Canada-India relationship across energy and critical minerals, technology and AI, talent and culture, and defense, essentially the same template applied to a second major Indo-Pacific partner in the same trip. So how does all of this actually connect to the bigger claim in the headline that this could reshape global trade? The honest answer requires some care, because a bilateral partnership between two mid-sized economies, however substantive, isn't going to single-handedly dismantle a Chinese processing monopoly that took decades and enormous state investment to build. Independent geopolitical analysis is fairly consistent on this point. Alternative critical minerals supply chains take a genuinely long time to stand up. Most new heavy rare earth processing projects outside China aren't expected to reach commercial viability until 2027 at the earliest, and some assessments put the timeline for truly independent competitive alternatives to Chinese processing capacity at 20 to 30 years, far beyond the political attention spans usually available for these kinds of strategic pushes. China, for its part, isn't standing still while these partnerships form. Under its current 5-year economic planning cycle, Beijing continues investing heavily in maintaining its lead across mining, processing, and now increasingly the recycling stage of the critical minerals value chain as well. What the Canada-Australia partnership actually represents, then, isn't a single dramatic reversal of Chinese dominance. It's one more building block in a broader, slower-moving realignment that's been gathering pace across the Western world and its allies since roughly 2023 and 2024. Canada's own Critical Minerals Production Alliance, the framework Australia just joined, already includes multiple partner countries brought in through a wave of investments and partnerships Canada announced with 9 allied nations back in October 2025. The United States has been pursuing a parallel track of its own, signing a rare earths production and supply agreement with Australia in October 2025, and a separate memorandum of understanding with Malaysia aimed at diversifying critical mineral supply chains away from China, with the U.S. Trade Representative's Office formalizing broader guidelines for these kinds of plurilateral critical minerals agreements in a release in late February 2026. Separately, more than 50 nations, including India, are participating in a wider international coalition explicitly focused on securing critical mineral supply chains and reducing collective reliance on Chinese production. But in that context, the Canada-Australia deal looks less like a single transformative event and more like Canada and Australia formally lining up two of their most significant mineral endowments inside an expanding network of like-minded producer nations, one that includes the US, parts of Europe, Japan, India, and others, all pursuing a broadly similar goal from slightly different angles. That's a meaningful trend. Whether it actually reshapes global trade in critical minerals depends less on any single bilateral signing ceremony and more on whether that entire coalition can collectively fund, permit, and build enough processing and refining capacity, the genuinely expensive and slow part of the equation, to meaningfully dent China's roughly 90% grip on rare earth refining within a realistic timeframe. On that front, the honest state of play, as of mid-2026, is early stage and promising in terms of political alignment, but still years away from delivering the kind of production volumes that would visibly shift the global market. What Canada and Australia have built here is best understood as strategic infrastructure for a longer campaign, rather than a finished achievement in itself. The Clean Energy Partnership, the shared investment vehicles connecting pension funds worth trillions of dollars, the AI safety cooperation, the defense industrial ties, all of it lowers the practical and financial barriers for the kind of large-scale mineral processing investment that will actually need to happen over the coming decade, if either country, or their allies more broadly, want a genuine alternative to Chinese-controlled supply chains. The two countries have committed to keeping this machinery running through regular meetings of their economic, industry, natural resources, and defense ministers going forward, rather than letting the relationship reset to a photo op every few years, which is itself a signal that both governments see this as a sustained project rather than a one-time announcement. So could this pact reshape global trade? In the fullest sense of that phrase, not yet and not alone. But it is a genuine, substantive step by two of the world's most significant mineral-producing democracies to formally coordinate their production, their processing ambitions, their investment capital, and even their defense industries, at a moment when the world's reliance on a single country for the materials underpinning batteries, defense systems, and AI infrastructure has become impossible for policymakers in Ottawa, Canberra, Washington, and Brussels to ignore. Whether that coordination scales fast enough to matter against a Chinese processing advantage built over decades is the real question this partnership has opened up, not one it has yet answered. Resources, political stability, advanced economies, established financial institutions, strong universities, large pension funds, military capabilities, and critically, governments that are increasingly willing to treat economic security as part of national security. Canada has enormous potential in minerals and energy. Australia has enormous potential in minerals and energy, but potential isn't the same thing as production, and production isn't the same thing as processing. And processing isn't the same thing as controlling a supply chain. That progression is where this entire story will ultimately be decided. Imagine for a moment that 5 or 10 years from now, a Canadian mine produces a critical mineral. That material is transported to a Canadian or Australian processing facility. The refined material then moves into a battery, an electric motor, an advanced electronic component, or a defense application. The financing comes partly from institutional investors in both countries. The technology is developed through joint research. The workers are trained through shared programs. The final product is sold throughout allied markets, and the entire process happens without depending on a geopolitical rival for the most strategically important stage of production. That would represent something far more consequential than a diplomatic agreement. It would represent a different model of globalization, not globalization built entirely around the cheapest possible supplier, but globalization built around trusted supply chains. And that distinction could become one of the defining economic debates of the next decade, because there is a trade-off. Resilience costs money. Redundancy costs money. Building a second refinery when an existing refinery already operates more cheaply somewhere else is expensive. Building a domestic supply chain for something that can currently be imported for less is politically difficult. And voters and businesses eventually ask the obvious question, who is going to pay for it? That's why the involvement of pension funds and institutional investors may be one of the least flashy but most important elements of the Canada-Australia relationship. Government announcements can create momentum, governments can change regulations, governments can offer incentives, but eventually, private capital has to enter the equation. Billions, potentially hundreds of billions of dollars will be required to build the infrastructure needed to create genuinely diversified supply chains. And that is where Canada's enormous pension system becomes strategically interesting. If Canadian and Australian institutional investors begin directing meaningful portions of their capital toward mines, refineries, energy infrastructure, processing facilities, and advanced manufacturing, then these agreements stop being diplomatic statements and start becoming financial architecture. That could be the difference between a partnership that sounds impressive and a partnership that actually changes markets. But there is another reality that cannot be ignored. China isn't standing still. Beijing knows exactly what is happening. China didn't become dominant in critical minerals overnight. It spent decades building that position. It invested across the entire value chain. It accepted lower margins in some areas. It developed specialized expertise. It built industrial clusters. It developed infrastructure. And it created an ecosystem that is extremely difficult for competitors to reproduce quickly. That means the countries trying to diversify away from China aren't starting from zero. They're starting from behind. And catching up will require patience. It will require political consistency. It will require enormous amounts of capital. And it will require governments to maintain policies long enough for projects that take years to build to actually reach production. That last point may be the hardest one. Because politics operates on election cycles, mining operates on decades. Refineries don't care who won the last election. Neither do transmission lines. Neither do processing plants. Neither do industrial supply chains. A government can announce a strategic project today, but the economic benefits may not appear for 5, 10, or even 15 years. And that creates a fundamental challenge. Can democratic governments maintain a long-term industrial strategy even when the political incentives are overwhelmingly short-term? That may ultimately determine whether this broader effort succeeds. And this is where the Canada-Australia partnership becomes more than just a bilateral story. It becomes a test of whether middle powers can actually build strategic influence by coordinating their strengths. Canada doesn't have to become a superpower to matter. Australia doesn't have to become a superpower to matter. India doesn't have to become a superpower to matter. Japan doesn't have to become a superpower to matter. Instead, these countries can combine what they already possess: resources, technology, capital, manufacturing, markets, defense capabilities, and diplomatic relationships. Individually, each country has limitations. Collectively, they can become much harder to ignore. And that brings us back to the message Mark Carney delivered in Canberra. Middle powers have a choice. They can compete individually for the attention and favor of larger powers, or they can combine their strengths and create more leverage together. That idea may become increasingly important in the years ahead, because the global economy is becoming less defined by a single interconnected marketplace and more defined by overlapping networks of trusted partners. The question is no longer simply, where can we get this material cheapest? Increasingly, governments are asking, where can we get it reliably? Who controls it? Who processes it? What happens if that supply is interrupted? And perhaps most importantly, who do we want controlling the infrastructure our economies and militaries depend upon? Those are very different questions, and they lead to very different economic decisions. For Canada, the opportunity is enormous. The country has the resources, it has the capital, it has the geographic advantages, it has access to major markets, and it has the political relationships necessary to build a trusted supply network. But the opportunity comes with a warning. If Canada simply exports raw materials and allows other countries to capture the refining, manufacturing, and technological value, then it will have solved only part of the problem. The real prize is moving higher up the value chain, mine the resource, process it domestically or with trusted partners. develop the technology, build the components, manufacture the finished products, and create an industrial ecosystem that captures more of the economic value at home. Australia faces a similar challenge. It has some of the world's most important mineral resources, but the strategic question isn't whether those resources exist. The question is what Australia does with them. And that is why cooperation between Canada and Australia could become increasingly important. They don't need to duplicate everything. They can specialize. They can share expertise. They can coordinate investment. They can connect their industries. And they can create enough scale to make projects that might otherwise look uneconomical suddenly become viable. If that happens, the impact won't necessarily be visible tomorrow. There probably won't be one dramatic moment when the world wakes up and says, China no longer dominates critical minerals. That's not how this works. The shift, if it happens, will be gradual. One mine, one refinery, one processing facility, one long-term supply contract, one investment fund, one battery plant, one defense manufacturing partnership, one agreement at a time. And eventually, if enough of those pieces connect, the structure of the global market begins to change. That's the real story behind the Canada-Australia partnership. Not that China has suddenly lost its advantage. It hasn't. Not that Canada and Australia have already created an alternative supply chain. They haven't. And not that one visit to Canberra is going to rewrite the global economy. It won't. The significance is that two resource-rich democracies are recognizing the same strategic problem and deciding that they can no longer afford to address it independently. They're building relationships between their governments. They're connecting their investors. They're integrating parts of their defense industries. They're coordinating around artificial intelligence, they're expanding energy cooperation, and they're trying to turn natural resource wealth into strategic leverage. That is a much bigger ambition than simply selling commodities, and if more countries follow the same model, the consequences could extend far beyond critical minerals. We could be watching the early stages of a broader restructuring of global trade. A world where supply chains are designed not only for efficiency, but for resilience. A world where national security increasingly shapes investment decisions. A world where pension funds become tools of economic strategy. A world where critical minerals are treated with the same seriousness that countries once reserved for oil. And a world where middle powers discover that their greatest strength may not be their individual size, but their ability to coordinate. The next few years will tell us whether that vision becomes reality. Because signing agreements is the easy part. Building the infrastructure is the hard part. Getting permits is hard. Finding skilled workers is hard. Financing projects is hard. Competing with established Chinese supply chains is hard. And keeping governments committed for a decade or more may be harder than all of it. But if Canada, Australia, India, the United States, Japan, Europe, and other partners can actually turn today's political commitments into physical infrastructure, then something genuinely significant could happen. Not an overnight revolution. Not a sudden collapse of China's dominance, but a gradual erosion of the assumption that the world has no alternative. And perhaps that is the most important point of all. Because strategic power doesn't always come from controlling everything. Sometimes it comes from making sure nobody else can control everything. Canada and Australia are betting that cooperation can give them that kind of leverage. Whether they can turn that bet into mines, refineries, factories, technologies, and secure supply chains is the question that matters now. The agreements have been signed. The political message has been delivered. The money is beginning to move. Now comes the difficult part, building it. And if Canada and Australia succeed, this may eventually be remembered not as the moment they defeated China's dominance in critical minerals, but as one of the moments when the world finally began building a serious alternative. And that could change far more than the mineral market. It could change the way the global economy itself is organized, because the next era of globalization may not be about choosing between isolation and total integration. It may be about something in between, trusted interdependence. And Canada and Australia may have just taken another important step toward building it.